following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this day before Christmas, December the 24th, and the Dow is down 444 points at 22,000. That is a December decline from the 26,000 level to just under 22,000. Certainly in points, that's the kind of range that we would see sometimes going over months. We've just done it in 1 month, the all-time high, 26,951. October the 3rd high. That makes it even another 1,000 points. So this is definitely, under any circumstance, we've got speed here, not time, just speed. We haven't spoken about time yet because when you take 3 months, well, you can say really 2 months because the high was October the 3rd. That makes October's high the high. You had to wait for the next month before you actually got a peak F. One of the things I've been worrying about for quite some time is those monthly charts. The lettering in the Chapman wave had suggested that it could be a far more serious decline if, in fact, there was an alternative count. So here we go. The Dow's down right now to the 22,000 level. It's taking out some important support. The weekly chart, you can see, has got more than a one-to-one to the downside, is what I call a propeller shaft formation. The MACD in the weekly chart is very negative. Stochastic's at 9%, 9.83. The daily stochastic is at 4.75%. Technically, we should be very close to at least a rebound. Now, this is a big problem. When you have a waterfall cascade, unless there's a climactic low with volume skyrocketing, the VIX index just powering up. What is the VIX right now? It's at 34.244. VIX up in the 40s or maybe even the 50s under a scenario like this. That V-shaped recovery means nothing if you say, oh man, let's see if we can get 1,000 or 1,500 point rally. Hey, what do you mean? That takes us to early last week. Takes us to Friday's high of 23,000 in the 23,200s. No, you've got to have a really powerful, a culminating move. Now, here's my thinking. Over a period of months, over the period of the years, I've watched the months of October and March being the most important in terms of key turnarounds, upside, downside. But very often what you've got is an October low that is retested. It's like the internal lows in October, and then the residual low is in April. However, we've made highs, and in this case, it's the Dow high in October. So it would not be surprising to me if that we are really close in time. You never know what it is in points, because still, if today closes absolutely ugly and there's just no news on Wednesday, we could have a really bad week. That 21,356 level, the 200-period exponential moving average in the weekly chart would then be a possibility. I mean, look at this. We've seen 1, 2, 3, 4, 5, 6, 7 little doji candle. So since the high of 24,740 back on the 13th of December, we've only seen big red candles, ugly red candles. So what I'm looking at here is the chance that we are really close in price and time, but we don't know what the price is. Close, let me say more in time than price, to some kind of a rebound that's going to try to accelerate to the upside, then have to do retesting. But in the meantime, we would have a rally that goes into January, maybe even February. And then we turn down and we start to decline into March. Maybe it's April. So I said April before, I meant March. So we've got October and March are the key dates. There are times where we've seen the semiconductor index bottom in October and then make a residual higher low in March. And we've seen other times where one of the indexes, either the Dow or the S&P, makes a low in October and a lower low in March. That's kind of what we saw back in 2009. All right, enough with that. Now let's go on. We've got the S&P right now. And one of the things that's really now concerning me a little more than it had been earlier is that in my automated support levels, I don't have very much coming up at all. So the S&P has just taken out decisively intraday the weekly support of 2388. We're now at 2369. So this is just the first couple of hours of the first trading day of the week. So this is going to be really important because that makes the 2380s to 2390s strong resistance to take out. And then monthly chart, look at that. And now if I continue this trend line support, this is 2268, 2275, somewhere around there is the key support in the monthly chart, uptrend line. The QQQs, any big rebound has to actually go from 2368, where we are now, probably going to be lower by the end of the day, the way things are going, and has to climb over 2,510. It has to get over the 9-period exponential moving average of just a couple of days ago, right? QQQ, NDX 100, 144.79. We went from 187.53 to 146, and that was about a 20% correction. Now we are at 144, so that's increasing. That makes the resistance up in the 154 to 157s, and key support is 138, the 200-period exponential moving average of the weekly chart. Let's go to the IWM. Not good news right now. The IWM is down 1.40 at 126.97, and that means that the 24% decline is now about a 25% decline. We've gone from 173 to the low today of 126.25. Really ugly chart. This is in leg D. Now, this is very interesting because the daily IWM is in leg D. The daily S&P is in leg, I think it was F. Yep, F. It could be an alternate count, but I'm treating it as an F right now. And the Dow is in, I believe, also an F. INDU is in an F. Oh, G/C. And you've got the QQQ, I think I missed that, is in leg C. A G/C, sorry. G, no, that is definitely a C. Can't do an alternate count there. So now let's go to gold. Gold is rallying, and now gold is picking up steam. It's up $14. This is what I was talking about the other day when I said that if gold is going to really move, you want to see it become a currency of fear, and that's really what it's doing now. And I kept talking about the XLF, the relationship, at least for me, this is the way I look at it. With the XLF, the financials down, look at that monthly candle, down 30 cents at 22.50, 30.33, that's a 7 that's about a 20% decline in the financials. And I think that's saying that way below the 200-period moving average in the weekly chart, that's saying that gold definitely is working as a currency of, I'll be right back, Dow's down 490.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. So we're looking at gold. Gold is 1271, up 13. This is a leg F. I'm calling it an F now. It might have recycled, but the MACD is very strong. The stochastic is 86%. Either way, it's turning that 1258 to 1253, where the moving averages, key moving averages, are into pretty strong support. Leg C has continued in the weekly chart. As I said for a long time, it's very impressive if you just look at the higher highs, the stair step, higher high, higher low situation in the gold contract. Not if you're looking at it as coming down from the 1390s down to the 1167 area. But yeah, this is very positive. Certainly, I'm going to say on the shorter term, but in fact, the intermediate term weekly chart has started to improve enough. The monthly chart is still, it's a great candle, but it's not a great chart formation. It'll take time to improve there. If you look at the SI, the silver right now is at a peak D. It's walking the 14-period moving average. It's above the 9-period moving average. Not that impressive. But let me just go back to this issue here that silver is it's just a different medium altogether. It's part of the metals, absolutely, of course. But gold, I think, at this particular point is looked at this has got nothing to do with the commoditization of gold, whereas silver is a very usable product. It's in many parts of the economy, used in many parts of the economy. Gold really is not. And gold at this particular point, I'm looking at as if it was the euro, it's as if it was a currency. Look, the euro at this particular point is doing very nicely. But it isn't breaking out. That monthly chart is just not very good. The weekly chart is, yeah, it's okay. It's a flat stochastic. Even with the rallies, it hasn't gone above 22%. Above 24, 25%. It's at 22%. That's okay. But I'm looking at this and I'm saying, this is more, from my perspective, I'm seeing gold now, and you can see it by some of the key stocks that I look at least. ASA, nice move, certainly a great move from just under 840 to 934 right now. Great percentage. But look at that weekly chart. So these things are going to move very quickly. If gold keeps rallying, they'll suddenly pick up steam. If you look at RGLD, I suspect that this is one that you got to keep your eye on. That is a great move from 70 to 84, 14 points. But It's the weekly chart that's really impressive. So yes, this is a very good one, and it's held beautifully in the monthly chart. If you look at, so let's go to ABX, which is another very good American Barrick Gold, or is it just called Barrick Gold now? That's just kind of in the middle there. So this is a very mixed market. Now, what's really important about this is that within the context of it being gold itself being a safety factor, same as the TLT. Look at the TLT at this point, up 65. Look, it's gone from 111.90 to 122.03. That was Thursday's high. And it's stalled, I said to subscribers, 121 to 122 has a very strong level of resistance for the iShares Treasury bond yield. If that breaks to the upside, it'll go very quickly then into the 123.50s, back right up into the 124s where it was at the beginning of January of this year. And that's going to be very important. So far, you've got a totally weak market. You've got no volume today. You got they can pretty much, the people that have the big funds are able to do pretty much anything they want, because if they're putting in a sell, it'll push prices down. If they put in a buy, it'll be reflected by some stability. It doesn't have to break anything, have to break out, but it means that if they're doing any buying very quietly here, this is a fantastic day for them to start doing some buying, and I'll explain what I mean by that. If you're looking at the USD JPY, I just want to finish the currencies, and I'm going to go to say Amazon, etc. Look, peak D in the weekly chart, around about the 114. What was that? 114. I think it was 45 or something. Let me double check. It was a little while back that it made its high. 114.58 back in October the 3rd, same day as the Dow made its high, and here it is falling. Now the Dow has taken out lows, important lows. The yen is not yet 109. That's your 200-period moving average support in the weekly chart of the yen, and it's down 0.75 at 110.45. So it kept getting repelled. We saw that for a couple of weeks in the U-shaped formation. A W turns out, and then it failed. So all of this is really important because it's saying that. Now I can go to what I wanted to show. Look, Amazon at this point at $13.45, down $32. The stochastics at 7%. The MACD is very negative in the daily. Weekly is very negative. Stochastic is now a little higher than it was earlier on, but it's at 22% earlier on, meaning in October. And that monthly chart, this is the first big pullback that we've seen in Amazon. So this candle right here, a doji candle, as we were talking, that 1363 was last week's low. Now we've got a low today of 1307. And I've got a target here over a period of time. 1,084 is the 200-period weekly exponential moving average support. And I suspect there's a chance that we will get there. And that's saying, if you put it, as I said to subscribers over the weekend, you put this together with Federal Express plunging from the 260, is that 265? 260? Let's just go there. Oh, there it is. That was the high of no, that wasn't the high. That was a high. 259 back in September, but the earlier high was peak F at 264. Yeah, it was. No, it was 266.67. I'm going to put that in. 266.67, and I think that was back in July or June. I think 6. I'm just going to put 66, and I'll change it later on when I check it out. So from 266 to today's low of 266 to 152, 110 points. Oh my! I mean, what is this saying? As I said before, if the Fed was looking at my cash index, my CTAS, that is a Cintas, down from the 217 level to 156. Cash is Amazon. We just did Amazon from 2050 down to today's low of 1,307. If we go to the SPY, down about 17% from it's at 236.45 right now, from 263. Wow, a 60 point ish, no, 50 something point decline. These are big declines. Now, what am I saying? It is a 60, yeah. And if you look at H, which is Home Depot down today, down 28 cents, not too bad, at 160.20, but it came from 215. That's 65 points down. I mean, this is serious stuff. This is really serious stuff. That's what the Fed should have looked at. Hey, Fed, where are you? Okay, here we go. The Dow's trying to rally a little bit. It's down 422. S&P's down 41. And the E-mini has just bounced a little bit. That makes it 2360 absolutely key support to hold. And 2383 will say, hey, a little bit of rebound into the close today before the Christmas holiday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar End of Year Sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. So I was asked about Bitcoin just in the break. So Bitcoin, the GBTC, this is the fund, Bitcoin Investment Trust, made a high of 38.71. And that was, remember, that was a year ago. I was talking about this. I think actually it was November. That was December. December went to 38.71. Went to the New Year's Day party, or I can't remember if it was New Year's Eve or whatever it was. And everybody was talking Bitcoin, Bitcoin, Bitcoin. And I said to myself, when I came, in fact, that very Monday, when I came back, or Tuesday, whatever the day was, on the first trading day of the year, I discussed it and said, wow, that's not good. And then over the month, I kept saying, I'm really upset because I've not heard anyone talk about a down Bitcoin, but I have heard throughout the month of January and into February, every single person who came on to discuss, the experts who came on to discuss Bitcoin, were talking about 40, and then the next one would up it at 50, and the next one would up it to 60,000. And I thought, no, that just can't be. And Bitcoin, it came down recently. Actually, I can't get it right now. No, I don't want to get it. But the Bitcoin trust went from 38.71 to a low just a week and a half ago of 3.82. No, 3.76. So I would say that that's a little bit of a decline. And I think at this point, there are going to be trades, percentage trades, let's face it. If it now it's at 477, that's already a point up. It's 28 to 32%, right? Bounces. So as a trade, I think in the next 2 weeks, we aim to have something that says, you know what, if you're able to get the next pullback and certain things hold very well, that could be a trade that says, yep, you've got a risk. You know what your defined risk is, especially if it doesn't get close to the low of 376, because 374 could be your defined risk. And then you've got something that's a tradable only because it is extremely out of favor. It's not oversold. Oversold means it's ready for a bounce. Out of favor means that at any point, even if it rallies, there's going to be disbelief because so many people have been hurt in 1 year to decline. If it went from 370 to 38, from 3.70 to 38, you would have had yourself a 3-bagger, a 10-bagger. So you've now got a minus 90% or whatever that is. This is not good. Okay. So yes, there are going to be areas that I'm looking at. I am looking at the MJ, which is this is a marijuana ETF coming down. It's at 23.73, $45 to 23. Hits the 200 period moving average in the monthly chart. I think it's getting close to interest. No, I'm not talking about buying yet. I'm thinking it's interest because I want to see a maturity in some of the companies that at least I'm following, CGC and GWPH and others, to see whether or not they are in unison, as instead of rotating leadership and then rotating to the downside, I want them back in unison and then rallying in unison. And then I think we've got, you remember I was speaking about the gaming ETF the other day, JPT, I can't remember exactly the symbol, I've got it written down, BJK, I think it was BJK. And I said that was a mature company and it's already had a major bull market. Now it's in a period of rest. Yep, there it is. It goes all the way from the 50 area down to today's low of 31.25. I would call that a decline. So the next area of interest, I think, over this coming year, 2019, should be at some point, I don't know just when, but at some point, the cannabis type stocks as a sector. That's all. Remember, we were looking at the SLX, which had fabulous runs. That's the steel sector. Can you believe that the steel sector, which had a really nice series of bounces throughout the year and then went to 51.92 in May, has gone from 51.2 down to another 33.92 this morning, just almost a straight line. Well, is there still a single leg A from the high that was made in May at 51.92? So that's the steel stocks. Now, when do you think the steel stocks could start to come back strong? I suspect that there are going to be a couple of false starts, Vanek Vector Steel ETF, and then maybe it will. So a question came up is, so what's the outlook for the year? When is it going to be time? I think what we're looking at here, see, my thinking was from the way we went up let's just go to the Dow for argument's sake. The way we went up in that U-shaped pattern suggested that there was enough strength that perhaps the whole 24,000 to 23,300 area, there'd be bounces and it would take a period of time into January before we tested 23,300. Then there would be a rally and then there would be another pullback. so that we see a series of lower lows and lower highs. But what we've done now is we've accelerated, we've compressed everything in terms of price. So my suspicion now is that there are so many stocks and indexes that have gone in one foul swoop to the downside that we're looking at price. Time will be made up by a counter-trend rally, and it doesn't have to be a whopper of a rally. It just means I'm looking at volume, explosive volume, VIX culminating low, because now we have to inaugurate the internal low because we took out the 23,300s. And then we have a rally, and that's where we see what we sometimes see, the October low and the March higher low, or the October low and the March lower low in the different sectors. So this is going to be the December, whatever it is, maybe 1st of January, internal low, and then we have to wait quite a while, maybe a few months, before we get the test of the next low. That's the way I'm looking at it, because there are other factors that we need to look at, and I'm going to bring it in right now, which is the VIX index. I had a question about it. Yeah, what was it? Yeah, the VIX. The VIX now is in a leg F/B in the daily chart. It has gone from the 16s, just way back at the beginning of December, held steady in the 20s, and then broke out above 26, I should say. And now we have a high today of 35 round number. I don't know if round numbers count in the VIX index. We don't get too many of them. A round number high so far. In fact, we can call it a round number multi-month high, because February was the high of 50.30, and that was all interest rates. This one, yeah, I usually like to label what it is. At the top, I put in rates, shutdown, tariffs in this particular one. The other one was, what did I put in that one? It wasn't just rates. Yeah, it was. That's right. Well, it was mostly concern about rates. And this one, I put everything you can think of and what you haven't even thought of. And what have we got here? We've got, generally comes up impeachment. We've got rates. We've got tariffs. We've got, I'm forgetting one, taxes. We've got conflagration coming up. Oh, we've got the wall. How come I forgot about something like the wall? It hasn't been mentioned for a little while. Yeah, and the wall. So it's everything you can put in here, and that's why we've got this accelerated move down. I'll be right back. Basil Chapman, Dow's down 500 points, S&P's down 50.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if you're looking at my automated levels, the gold has 1274 as resistance and then 1287. This is in the weekly chart. It's broken out from all the daily ones. And you can see that in the monthly chart, 1262 has been taken out and you've got much higher levels to come. And the 120-minute chart, 1271, we're at 1272 right now, is the resistance to overcome. Let me just show you this here. We've got the XLE, a question about the XLE, which is the Energy S&P Select Energy Spider Fund. It's down 2 at 54.09, down 3.58%. It's taken out all the support levels in the monthly chart, all the support levels in the weekly chart, so far in the daily, and you've got just a couple here at 50, at the 50.53 and 54 level in the 10-minute chart. So this is the question I had here. Has it got a left side, right side price time match? So in the monthly chart. So the monthly chart, I drew this in a long time ago. One of the things that I really worry about when I see, you see this pullback, and then there was a rally, and there was a peak D made in the monthly chart back in 2010. And then it pulled back to support, and then it took off and went all the way from the 61-ish area to a high of 60, no, well, not 60, 80.90 in April of 2011. And then it pulled back and it made a nice trend line. Well, that trend line was broken. It went to 101.52 back in 2014, comes down, breaks the trend line, and starts to move to the downside. Now you see this little arch formation that held a higher low. Yeah, we made an arch and we held a higher low, but we went even higher to a peak D. But now we've just taken out the major up channel. This is a monthly chart, major up channel support level. What I always get worried about when I see that pattern is that one-to-one to the downside. Now, I don't one-to-one to the downside, 101 to the 50 area, that's 50 points. That means you've got a 50-point move to the downside. No, I mean, that from at least the high over here, at 80, and that takes you to 30. Now, I think we're going to find some support above 50. It better be good support above 50. The low that was made the week of the 29th of January 2016 is 49.93. So that 50 level is going to be really important. So what I am looking at is, I just don't want to have to go like this and say, we're looking at a breakdown, a one-to-one Chapman wave propeller shaft formation. I just don't think that's the case. I think that we're very close in energy to at least testing and then rebounding for a lowercase h that goes to a lowercase m. I hope so, because MACD is only just tuning down in the monthly chart, and the stochastic is now at 37. Next question I had was XOP. No, RTH was my first one. What was it? Yeah, RTH. Could I look at it? Yeah, that is now a peak. There's no way that by a week from today, the end of the month, that we're going to get, let me just double check, end of the month. Yeah, Monday. You're going to break in the Market Vectors Retail ETF. You're going to close anywhere above 100. You're at 87.62 right now. This is a peak E in the monthly chart. There's no other notation for it. The MACD is cross negative, stochastic is 75%. So the 84 level is the 200 period exponential moving average weekly support level. I would prefer a bounce before it even gets there. But this is retail, and this is talking about this coming holiday season, the profits in the different sectors. Look, this is the XRT, is the S&P Spider Retail. It's got an even uglier chart formation because it made, in many ways, because it's made this cup formation. And remember the rule of the thumb with the cup formation? That's the reason why in the Dow I'm watching this very closely, because it took out 1/3 to 1/2 of the left side look to the base in the retail. And that says you should, if that's the case, you invariably test the low. Well, 37.72 is the low. It's at 38.70 right now. And if it takes it out, there is a chance that you can get a 1-to-1 to the downside. But first, 32.27 is the monthly 200 period exponential moving average key support level. So I'm watching this very closely. Thank goodness subscribers have got one of the biggest cash positions. We're just not looking for, other than quick trades, we're not looking for positions yet. That will come. So the question is now XOP, which is the XOP right here. XOP is the S&P Spider. This is the oil and gas. Yeah, look at that. That's the same as the XLE. This is not a good looking chart at all. And then the next question I had was, where did it go? Oh, IYT. We've looked at that all the time. And I keep saying that if the transportation index is this weak, it's not very good for the Dow in Dow theory. And I'm not a Dow theorist, but I do love it when the two are working together, as they did when the transports, the IYT, iShares Dow Jones Transportation Average Index, went to 209.44 in September. The Dow was rallying and the IYT was rallying. Then what happened is the IYT turned around before, almost a month before, actually a few weeks before the Dow. So this is not that good. So what's the best looking chart you have seen so far? Obviously, it would be the gold chart and it would be the TLT. And these are these are telling you that the general stock market itself is not good. If I go to, I thought there'd be safety sectors. If we haven't done anything about it, I'm watching them closely, and I'm thinking of the, what is it called? Oh man, why have I just suddenly slipped my mind? Those are the security ETF. Oh, can't recall the name right now. So yeah. So when we're looking at, you would expect consumer staples to do very nicely in this environment. But if you look at the consumer, look at PG, Procter & Gamble. Procter & Gamble, ugly. Peak deed made just 2.5 weeks ago, 3 weeks ago, in the 96s, and it's trading right now at 87. It's still one of the better looking charts, but if I look at HACK, I think that's the one I was looking for. HACK, yeah, HACK has gone down from the 41 area, just over 40, to 31 right now, and this is in security. I mean, HACK is the prime cyber security ETF, the ETF MG prime cyber security ETF. This is on my radar for next year, but wow. It must hold. It must hold the 30 to 29 area. 27.94 is the 200 period exponential moving average in the monthly chart. So you can see that almost every sector, if you look at even the dividend stocks like an XOM, has gone. This is the reason why I said all year I've been saying I cannot trust the usual big dividends like ExxonMobil or even Verizon. Where's Verizon right now? Oh yeah, even Verizon's taking a dive from the 61s to the 53 area right now, and that had held best of all. This is a tough market. I don't have to tell you, it's a tough market. Dow's at 532 right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Everyone, so the market's wrapping up in a few minutes, and the Dow is down 550. So this is the first, I would say, over the last 2 weeks, is the very first time that I can recall almost everyone that I see, that I know, actually asking me about the market, even people who never mentioned the stock market to me. And that says to me that there's a concern here that is different to other times. It's obvious. I mean, when you look at if you're looking at the Dow, well, let me just pull up this chart as we're about to go to a wrap up here. Can I find it in this time? Will I be able to find it? This is the Dow monthly. All right, this is a good example. If you're looking at this particular chart right now, this yellow chart, you will see there's the Stork formation. This is also the Chapman fulcrum with the extension to the upside. Look at this red candle. It's taking out key support levels. If you look at the doji candle of August of 2017, high of 22,179 and a low of 21,600, We're almost into that candle, and that was just a moment of hesitation. It didn't change direction. It was an inflection point, not a deflection point. So that says to me that this is something, 21,600 is really an area that I have to keep a very diligent eye on. There are a couple of things that are going on now, because if you can look at this, we've done in 1 month, I'm not talking about the high that was made in October, just this red candle. It'll have to be such a spectacular turn to the upside with everything going on. Tell me, do you think that there's going to be everything going right in the next few days? I don't think so. You might have to wait until early January, or at least the last day of January. So it says to me, you've got to still be very careful. Make a list of stocks that you've always wanted. Make a list of the stocks that have performed the very best, that have taken on a lot of damage at this point, not ones that have just started a correction. Take your favorites that you've missed on the way up. Start building up a basket. You'll have so many stocks that you won't be able to know what to do with them. But then what I want you to do is to filter out each one, and say, this is one I want a little part of, this is one. Don't do it now. Have a lot of time. Have a wonderful Christmas. We'll see you back here on Wednesday, and have a great day. Thanks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.